What's up, everyone? Hope you had a decent trading day today. A lot of turmoil, a lot of uncertainty, a lot of ups and downs in the market right now. Um, right here, you've got Credit Suisse. Okay, this thing has been battered, and bruised for the better part of two years. Okay, if you pull up a 1 year chart on this thing, okay, you go back to, this is the event, let's call it. Uh, it's changed most of our lives as we know it. The market recovered, and then it fell off a cliff, and it hasn't been above or even near really 200 EMA in a full year, 2 years almost. Okay, um, so that said, today they kind of got a lifeline, right? Right before close, coming into close, the last 45 minutes, hour, right? There was a rumor that the Swedish government, uh, or the Swiss government rather, was going to help them out with liquidity. In layman's terms, what does that really mean? Um, After close, however, so 5:32, 5:43. I'm pretty sure this is my time. So really, this just came out 6 minutes ago. Okay, 6 minutes ago. There's like 11 minutes left in trading. It says that Switzerland to rescue the Swiss National Bank. FINMA ready to provide liquidity to support. So they it says they released a joint statement. The Swiss National Bank (SNB) and the FINMA, which is the Financial Market Supervisory Authority, released a joint statement in recent turmoil and with the banks in the U.S. It says the turmoil is caused by banks in the U.S., which is interesting. So they're basically placing the blame on SIVB, SI, and SNBY, or sorry, SBNY. Um, it highlighted strict capital and liquidity requirements applicable. It says that Credit Suisse is one of Switzerland's largest banks, and it meets those requirements imposed on it. If necessary, they'll provide them with the liquidity. It goes on to say the regulation in Switzerland requires all banks to maintain capital and liquidity buffers that meet that and their standards. It's important to check the banks, such as Credit Suisse, to make sure they meet that. And although Credit Suisse has been particularly affected by market reactions in recent days, they confirmed that uh, they did meet those requirements. Okay, that it passed the checks. They did like some kind of a test on the stability or the liquidity, and it passed it. Okay. FINMA is in very close contact with the bank and has access to all the relevant information, why it matters. They're following developments in close contact with the Federal Department of Finance to ensure the stability. The joint statement aims to calm concerns. So it aims to calm concerns. That doesn't mean it will, but it's they're doing their best to quell concerns. Switzerland has a rep for being strong and stable with its banking systems. Okay, and Swedish banking, right? Um, Kind of like the Caymans, and the statement reaffirmed the country's commitment to ensuring the financial stability. With the strict regulation and oversight provided by FINMA and the SNB, and the Swiss financial institutions are well equipped to weather any any major crisis and shocks that may arise. Okay, so that's kind of the statement that they put out. I'm a little surprised actually that after this statement, the stock has slid a bit. It was really pumping into after hours, or sorry, in after hours, and it's kind of slid a bit. It's holding a support of 48 EMA, um, which is healthy. Okay, that is healthy, but we would prefer to see this actually try and attempt on a longer time frame, perhaps like the 1 hour, to come up and over. It's above VWAP. VWAP's really low on this thing, unfortunately. We'd like to see it come towards 270, and then maybe you pull it back to a 1 month, 1 day. You pull it back, and you can just see how detached it is from all levels. It's totally oversold at 22 RSI. Oversold usually means they have to come back up. Okay, unfortunately, it hasn't even begun to curl. We'd like to see that this event or news is the beginning of that curl north. Okay, that there's no telling how or when, like how long or when this could occur. But I mean, we did see some other banks recover pretty sharply today. Um, you know, Schwab for one. Even if you just look at the last few trading days, all right. Um, what was the other one here? Wall, right? Wall. Let me just change this to WAL. So Western Alliance Bancorp, right? Like, take a look at that, guys. It went from 77 to 7, so that's a 90% drop, right? All the way up to 40, and it's kind of stabilizing around 33. But we're talking I believe that's 600% gain, okay? 500 to 600% gain from the low to the high. So we are seeing some stabilization and then a move towards levels of what used to be support but are now resistance. We want to see that from CS as well. I don't think anyone is particularly enjoying all this instability. Sure, with the volatility, you can make good money on the volatility as long as you're guessing in the right direction, right? But at this moment in time, I personally feel like this stock is headed north. Okay, not south. It today I believe was its like all time low. Okay, so I mean when you're thinking about buying a stock, what's the old mantra, right? Buy low, sell high. It isn't. It is not. Uh, Buy high and then be forced to take a big loss and sell lower. Uh, so I think we're in a good spot here. Could see some volatility on open. We really don't know where the banks are opening. There's more data coming in and day out. It seems like we're constantly holding our breath with whatever the Fed says. With respects to the Fed, I think it's pretty commonly accepted at this point that they're going to go with a 25 basis points hike. They're going to stick with their original plan, which is literally what they did all last year, guys. They constantly told you what they were going to do, and then they did it. Not once did they deviate. They didn't go over what they said they were going to do, and they didn't pause or they didn't do any reductions. They didn't do any less. They've said they need this interest to remain and actually to increase slightly. And the only way to do an increase is to do a 25. What Powell said when he spoke to Congress twice last week, 2 days he was speaking to them, he did say that they are reassessing the data constantly. Okay, so that's like a glimmer of hope. So to save face, they're most likely doing a 25 BP hike, which I think at this point, with all that's happened in the last week, it's probably priced in anyways. Okay, and then I think they can say, look, that's probably enough for now. We're going to continue to assess. Like they can play it nicely with words. We can continue to assess the conditions. We can probably hold here for a little bit. Will that cause the market to run or rise? That's who could be certain, right? Everyone expects that the second they say pause, the market's going to rally. But I think it might be setting in a little bit that we've been lagging a lot of these hikes. And the fact that banks crashed so fast should be like a warning or a telltale sign. Yeah, that's what we were underestimating the impact of all of these hikes, right? Um, so are we going to see SPY push to 400 and 420 and 460 and 500? I don't think that's very likely. Um, Again, these are just my opinions and my thoughts. There's a lot of YouTubers and a lot of channels with their own and news outlets and everything, right? I'm just giving you mine and how and what is behind my thought process when I'm entering this trade specifically. Um, so I'm going long on the play. I have hedged a portion of my shares, with a covered call. If any of you don't know what a covered call is or understand how a covered call works, feel free to join my Discord. The link is here. It's in the description below. I understand it might be intimidating to or upsetting to join a Discord that is paid, has a paywall, right? But I mean, I looked at Meet Kevin's, for example, and he wants $150 just to be talking on his YouTube. And his courses are $700 and $800 and $1,000. I think $20 is pretty reasonable after the taxes, after the fees. It's like $11 in my pocket, so I think that's reasonable. I can go over the covered call. We did go over it in the live, and basically what it does is it limits your upside, but it also helps protect your downside, right? So, for example, I'll just give you a quick example, and then I'm going to end the video here. Is at the time I did a 240. I did 400. I protected them with a 240 strike. So that means that the highest is if on Friday the stock is $2.40 or higher, my shares get called away. I'm paid $2.40 each for the share at that time, even if it's $3 or $4 or $5. Okay, but I entered the play at $2.12, so that's okay. I'm making 28 cents there, right? 212 plus 28 cents, that's 240. But I'm also being paid 22 cents for that contract. It was 20 cents at the time. So I'm also being paid 20 cents. So technically that means if it gets called away for 240, you add the 20 cents, that means I'm selling my position for $2.60. Okay? So my cap is 260. But it also means if the stock were to stay kind of where it's at, or if it were to fall, okay, that means that let's say it fell. Let's say it fell below 212. Maybe it goes to $2. That's also okay. I didn't have the opportunity to sell in here, okay, but if my entry was 212 and I was paid 20 cents for the contract, that means I'll be keeping my shares because no one's going to pay me 240 for them when they can get it from the market for 2. I'll be keeping my shares, okay? And I keep that 20 cents anyways. I got that right away. 212 minus 20 is $1.92. So I'm technically still green. I can actually sell those shares right to the market right away. And once that contract closes, and be up 8 cents a share. So is that really big? 8 cents on a 212 risk is only 3.8% profit. Okay, if you can get slow and steady gains like that are reasonably safe. Okay, I'm not suggesting it is, and it can go against you and stuff in certain situations. But if you can get like 3.5% a week, 3.8% a week times 52 weeks, maybe on a compounding interest, like rolling your profits into new trades, you're going to be a pretty wealthy individual in a certain amount, in a short amount of time. Okay, and then by all means, if I got the full 260, if it's 240 or higher, right, and I get 260 on my 212 trade, right, that right there is 23%, 22.6%. So 22.6% from Wednesday to Friday, I'm also very happy with that. Okay, it's not 100%, it's not 50%, but I'm very happy with that return for the amount of risk that I feel I'm facing. And these are the kind of things I kind of try to pay attention to on a week by week basis. It's really stock dependent, market dependent. But that's the kind of content I offer, right? So if you want to pop into the Discord again, the link is below. And I hope to see some new faces. And I hope to see some of you live as well. Right?